it's time for our Monday special Midcap Mania with Nigel D'Souza, and we will focus on an automotive lighting company which is co-promoted by a Japanese major and focuses mainly on passenger vehicle space. Well, all the right ingredients. The stock is at a 52-week high and buzzing in trade today as well. It's up over 5% at the moment. Nigel joins in to tell us all about the company that he's done research about. Nigel.
Well, Sonia, I listened to you very, very carefully, and in terms of auto anchors as well, this is one stock that came on my radar. As you said, the stock is already buzzing in today's trading session. It's trading at a fresh 52-week high, if I'm not mistaken. It's at the high point of the day. What does it do? It's an automotive lighting company. In fact, it has close to 9 plants all across the country, and it has research and development centers both in India as well as in Taiwan. That's basically the background of what exactly the company does as of now. Just to tell you what they do in terms of automotive parts, we should get up a couple of clips. They produce it for various companies, and in fact what they produce looks like this. You know, that cap on top of the lights, that's what they are into. And also they have a whole host of clients. So Maruti is one of their biggest clients. They also service the likes of Hyundai, Hero MotoCorp, etc. So Maruti and Hyundai, they are some of their biggest clients as well. Now, moving on then, as you mentioned, in terms of shareholding pattern, the promoters hold close to around 73-74% stake in the company. Stanley Electric, that's a Japanese company which has a turnover of more than 25,000 crores approximately. That in fact has 37.5% stake, and the DK Jain group has the remainder 36%. In terms of funds that hold stake in the company, we have Fidelity North Star Fund as well as Param Capital. Both of them hold close to around 33.5% between them. Then if you just take a look at the financials, well, on the top line, nothing so great. You know, the growth has been, they should do around 950 crores. Now they're doing, in the last year, close to around 1,200 crores, 1,250 crores approximately. But their operating profit, that has doubled if you take a look at it in the last 5 years approximately. They should do around 45 crores. And now, in fact, just in the last year, they're doing 88 crores approximately. The margin picture as well, they used to do around 4.5%. In the last year, they did more than 7%. And even in the first half of this year, particularly in the last quarter, they have been, maintaining that kind of trajectory of more than 7.5% approximately. In terms of profit, it's moved from around 12 crores to around 36 crores. So the operating profit and the profitability, that has looked good. Obviously, there could be some reduction in finance costs, and that's perfectly depicted in their debt to equity ratio. At one point of time, it was more than 1.2 times. The last disclosure as per the company, it's come down to around 0.17 times. In terms of ROCE as well, that is looking very good, particularly in the last year. Now it is at more than 23%. So that as well is another positive. But just to focus on, I was talking about the tie-up they have with the Japanese company. If you take a look at their associate company, they also have a tie-up with a Korean company. And that, in fact, is known as SL Lumax, or their Lumax. That's a listed entity, has 21% stake. The remainder is held by by the Korean company. That's SL. And the profit number of around 36 crores, close to 15 crores came in from this associate itself for that 20% stake. So that's telling you that that unit is doing very well. And that unit is catering to the Hyundai unit mostly to Hyundai. It's situated in Chennai as well. Now, that's the breakup for you. 37 crores, 15 crores coming in from the associate itself. And in the first half of this year, they have already done 10 crores. So if you go by that run rate, then maybe they can do even 20 crores for the full of this year. That we'll have to see for the second half of this year. Well, key triggers going ahead. Majority of its revenues coming from the passenger vehicle segment. Sonia has been telling us that passenger vehicles have been doing quite well. So that's one of the triggers. Maruti is the biggest client. Maruti is going to be starting production in Gujarat. So that unit that they had set up for the Nano, that didn't really get up and going. They're going to be investing close to around 100 crores over there. So that's the second big trigger. And finally, they're shifting towards LED lighting as well. That is higher margins. And in fact, currently it's only lower single digits. They're aiming to take that up as well. So keep your eye out on those three main triggers. In terms of valuations, on a trailing basis, it's more expensive than FIAM. And everyone knows that FIAM has been a big outperformer in the last few years. Finally, what are the challenges? If there's a slowdown in the passenger vehicle space, well, then that's not very good news, because Maruti is a big client and majority of their sales come in from the passenger vehicle space. High dependence on Maruti. Every time there has been a shutdown, breakdown, F514, for example, numbers didn't look good. That's a challenge. And finally, the technical tie-up with global players. What if something goes wrong over there? Interesting stock. It has been buzzing. In fact, if you just take a look at a wider time horizon, the stock has done very, very well. Keep your eye out on this one. Back to you.
Okay, thanks a lot for that, for enlightening us about another auto ancillary that's had a really good run up until now. Remember, these are not stock recommendations at all. This is only proprietary research done by our colleague Nigel D'Souza.